The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
And joining us now as we recap Monday's market action. Soybeans caught a bit late in the session. Corn mixed, and the wheat trade was under some moderate pressure. Had a higher U.S. dollar. That seemed to weigh on things overall, especially wheat and in livestock. Let's talk about things. Joining us now for a conversation, John Heinberg with Total Farm Marketing is with us. And John, good to catch up with you again, my friend. And as I mentioned, kind of a interesting day. It felt like there was just a lot of dollar headwind in front of the market, and then soybeans caught a bit late. So something positive to take away from the start of the week, but largely just felt like a kind of a bearish type leaning day on Monday, John.
Yeah, I mean, we're still lacking that news. We need to maybe get this market to turn around to here in that regard. But, like I said, at least got a little bit in the soybean market. It's obviously been pretty heavily oversold. An area I was really watching was that 1180 area in March. And we did kind of hold that area today. So we'll have to see if that can continue to be a support line. Not sure if we got enough momentum to kick it to the upside here and really get some rally. I think we're pretty much at the mercy of what's going on in Brazil with the cash market there. Did see some bump in their premiums today, so that, maybe to get some beans moving as harvest continues to move along down south. So I think that's just going to be a big driver, but it was at least nice today to see a little bit of push into the soybean meal, a little bit of push in the oil. The products helping support that soybean market for, at least a positive day today, unlike corn and wheat.
Yeah, corn and wheat. Corn largely just held around unchanged, so I guess it's not a bad day there. But wheat, I have to think that dollar pressure probably is the main culprit in the wheat trade, John. What do you think?
I think that's a big portion of it, too. And just the fact, we got a little follow through after a fairly rough day on Friday in terms of just money flow. Now we'll see if we're falling back to some support levels here. At least it kind of seemed like, we're down 9, 10, 11 at one time. That kind of held in that 590 area on the March wheat, just under $6 on May. So we'll see if that can hold together. Watching the weather too, what's going on with the KC wheat belts. A lot of snow disappeared that was out there. Now it's at risk if we do get some colder temperatures coming back through, even though it seems like it's going to stay away for a little while here. But those things can bring a little premium back into the market, but at least right now, it just felt like today there really wasn't a reason for wheat to trade higher, falling through after Friday's difficult day, and having a dollar trading at its highest level since the November time window just doesn't help the commodity space overall.
Well, we have a WASDE report coming up on Thursday. Have to wonder what that report could tell us. By the sound of what I'm gathering from folks, John, and you can agree with me or disagree on this, watching South America production numbers seems to be the big thing that folks are gearing up to look at here. There's a wide range of private estimates out there in terms of that Brazil crop right now.
Very much so. I think that'll probably be one of the bigger drivers on the U.S. side. We'll see some demand adjustments. Obviously, crop production, those types of numbers are going to be a side on this report. So maybe there's just going to be some small line item demand adjustments in there. So we'll have to watch that for the U.S. side. But I think the market wants to see what's going to be the trend regarding those South American crops. Maybe now the Argentina numbers, given the weather that's kind of popped up here, has there been some damage? Even though we just recently saw Buenos Aires Grain Exchange raise their corn forecast up a little bit higher, even with the hot weather, is that going to be something that's reflected in the USDA side? So we'll have to watch how that plays out. The other side of it too right now still continues to be demand. Do we see what we need to see on that front? Bean market looks like it's quiet. Did see a little corn demand today. It was our first published corn sale since the 16th of January. It's nice to see Mexico step in, but again, it looks like a market on the demand front that's very hand to mouth here, just as buy as needed, not in quantity.
Yeah, buy as needed, and that's a great point that you make here. Demand has just been ugly, really. It feels like the last couple of months, John. We've talked about it, and to me, it feels like until we get something to chew through some of this robust supply, especially on the corn side. I think with this corn market, it's probably going to chop around this 440, 450 level, barring something crazy unforeseen, John. I mean, that's the feeling and indication I'm getting right now.
It does feel like we're putting a little bit of a bottom in here. But at the same time, the supply picture is still large. Did like the export sales numbers last week. We need to be in that 1.2, 1.3 million ton per week number. That's why the export shipments were disappointing today, but we shipped a lot of beans out. So that was probably where the focus was. On the bean side, export demand was awful last week. We've actually sold off now the last two export sales days in terms of those numbers just not being where we need them to be. But as the U.S. demand window is apparently closed here, at least while these South American supplies are coming in off the field. So, that's going to be the thing we need to watch going forward. Is our prices low enough to trigger some steady purchases, especially in corn? We need to see that kind of come through yet here. And having that export inspection number today wasn't, again, friendly just because of the pure fact that, we need those front end bushels kind of moving, and they're not, at least with the numbers we saw today. So, that's going to be a key component. I said maybe we're getting to a point, kind of like the wheat market's just kind of grinding along here, and just going sideways for a while until we get some type of news one way or another. Some of it could show up on Thursday's report from the USDA. If they come in and make some line item adjustments, move that demand pile down a little bit, increase carryover, or give us an extra push in South American crop supplies, that could get us another leg down.
Anything short term we need to think about here this week in terms of grain marketing ahead of that February report, John? What do you think?
We're getting also into that window. I'm a little concerned. We got basis contracts coming up here for March real soon. If you get some price movement, probably want to take advantage of that and you get things priced. I'm a little concerned. Do we see that blow out at the end of the month like we saw in December when all of a sudden the spread between December and March ran out to 20-some cents and guys had to eat that on the roll. So those are things that we're going to watch here. Do we get some cash movement in here? What's that do to price? And obviously then just watching the main stories, what's going to happen with the Brazil corn crop? How's that weather coming together? What's going to happen on the demand front here? We just need some steady news, and we're just not getting it right now. It's more of a blip every now and then, just a positive news and overall market's mindset, as we can see with the way the money is acting, pushing that big short position lower. They just aren't ready to come out of those shorts yet.
Let's talk the livestock trade, John. Let's jump over there. A down day on Monday, triple-digit losses. I have to think the dollar being higher was probably the main culprit there as well. Would you agree?
I think that was part of the issue today, too. We also have February live cattle expiring today, so that gets a little bit of money flow, in terms of getting that position settled out. I think that trickled across the markets today, too. Watching the retail values, not very good last week, about $3.50 lower on a choice carcasses across the week. Again, is the demand a little bit of a concern? We're starting to hit that Lent window here too, where we start seeing demand maybe taper off, even though the cash trade was very strong. And that was some of the reason we had the late push, in last week's trade was just the strength off of cash. So to me, we got a little bit of a walk back here. Probably doesn't hurt considering the market's kind of accelerated here over the last couple of weeks. Take a little premium off. But again, given those numbers from the cattle inventory report, just what you hear from guys on the countryside in terms of trying to acquire feeders, the prices that are out there, some setback here probably still opens up the door for this market to trade higher, especially in the feeders.
The cattle inventory report last week, too. I was at CattleCon in Orlando. Seemed like it was taken favorably. I mean, that report was neutral. I know there was a big revision in there, too, from last year that was very surprising. I guess, I don't know. I feel like we're maybe a little further away from rebuilding this herd than some people think. I mean, what are your thoughts after seeing all that biannual data we got last week, John?
Yeah, you go look at that calf crop where it's at, lowest numbers since 1941. The biggest thing I was watching, what are those heifers kept for breeding? Again, comes in under last year. So that does tell us, we're still in a contraction phase and not an expansion phase at this time frame. So that's still going to keep this market well supported, probably definitely in the end of the year. I like the third and fourth quarter when we start seeing that weaker calf crop come at us. And then into 25 yet at this time frame. Still the biggest key in this whole picture, I think, for cattle prices is in terms of their strength is going to be the consumer and the consumer dollar. Back when we first started making the rally, there was a little bit more free money flowing around there for investment into the beef as a retail product. That has me a little cautious here right now that the consumer dollar might just be getting a little bit tighter here. And that could be something that limits beef in that regard. We could still have tighter cattle supplies, but if the retail demand's not there, that could be, like I said, a bit of a wet blanket over a potential rally. So at the same time, I'm optimistic about the upside. I'm still looking at prices out there saying, hey, we got good value here. Let's make sure we got those safety valve puts in, hold on to those in case something does fall apart in the economy or something falls apart in the demand side and this market needs to take premium back out. At least we're protecting those longer term values.
Hogs felt like they're maybe just taking some profit too with a higher dollar as the excuse for a headwind there. Your thoughts in this hog market overall as we start the month of February off?
I didn't like the trade in that April contract at the end of the week, with the fairly strong down day, even though we consolidated on Friday. Just kind of felt like we got a little too rich too soon. So some pullback here isn't surprising me, especially given the supply side of the equation in terms of hogs out there where the cash market is. You got an index that's still trading about $9 under the April board, $1 under the February board. So there's some room for this market to walk itself back. Again, it was a market that got pretty heated up since the first of the year, basically rallying from 72 to 86 on that April contract. So again, maybe it's got a little far out over the skis given the hog numbers that are out there, and we could see some more walk back. Again, I was talking last week, with clients as well as in the advisor meetings we have, looking at those summertime puts and making sure we protect that $90 plus level going into those summer months, especially with the supply situation.
John, great thoughts as always. As we wrap it up here today, anything final you want to share or reiterate with folks here as they're thinking about things ahead of a WASD report and more this week?
A lot of things going on in the markets in terms of what do I do? We're at a window. Some guys may need to move grain. You don't like the prices, but we don't have a choice. How can we shift that risk? Make sure we have those conversations. I'd like to see a little bit more volatility to make some options move a little bit here. So there's other ways you can play re-ownership, but again, just kind of think about where you are with things. Things can always get worse. Things can improve. Again, just where are you at on the spectrum? Where is the risk at? And what do we need to protect, especially in the grains? Again, as much as we feel like prices we want them to work higher, the fundamentals are still saying no. But at the same time, we both know that eventually the funds, if they just say we've done enough on the sell side, they'll turn this thing around regardless of fundamentals. So how do we prepare ourselves for those things? Just have those questions ready for anybody you're working with on the marketing side.
Well, John, if folks want to reach out to you and ask some of those questions and work with you and the team at Total Farm Marketing, how can they get a hold of you?
Sure. Just give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com and that website of ours, totalfarmmarketing.com.
John Heinberg, always good to have a conversation with you, my friend, to start off the week. Thanks for joining us today and recapping Monday's market action. Have a good one. We'll talk to you next week.
Sounds good. Have a great week.
That's going to do it for the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.